Hey everyone, Dan Longman here at Priority Lending. I hope you're doing well. Hey, so I decided to start a new series here where I'm going to put out some educational videos for my clients. Now, this will be relevant whether you're a first-time home buyer or maybe someone that's owned a home for a long period of time, but you're now looking to purchase again and just don't really know where to start or don't really know the requirements when it comes to getting a mortgage. A lot has changed over the years, so I think this will be important, these type of videos. So in my 23 years in the mortgage industry, the question I get probably the most has to do with credit. People's credit scores. What's a good credit score? What do I need to have in order to get pre-approved for a mortgage? It makes sense why we get this question a lot because, getting an application and running credit is something that a loan officer or a banker is going to do right up front. So the thing I wanted to talk about today when it comes to credit is knowing the difference between your consumer credit score and your mortgage credit score. Some people don't even know that there is a difference. So most people nowadays know that there's three major credit bureaus that we pull from or that can produce a credit score. And this is Equifax, Experian, and TransUnion. And also nowadays too, what's great is that most people know their credit score, whether it's Credit Karma or freecreditreport.com, or maybe you have a credit and monitoring service through your bank, or maybe directly through the credit bureaus themselves, Equifax, Experian, and TransUnion. But it's safe to say that I feel like there's more awareness as far as people's credit and knowing their score. However, what you may not know is that your consumer score that you're getting through one of those sites that I mentioned is different than a mortgage credit score. So even though we pull through the same bureaus, the three major credit bureaus, Equifax, Experian, TransUnion, there's different algorithms used per industry. So the scores that you're getting on these websites, that consumer score, they use different algorithms than the mortgage industry and banks use when applying for a mortgage. Same thing applies to when you go shop for a car. So these three industries, and there's others, they use different algorithms. So I always give the example is you could go apply for a credit card, you can apply for a mortgage, you can apply for a car all in the same day. All three of us, let's say, would pull Equifax, and all three scores are going to be different. So these algorithms basically are determined by the type of credit you're applying for. And if you think about it, is it easier to obtain a credit card or obtain a mortgage? Well, definitely more difficult to obtain a mortgage. It's a bigger liability, more risk. So those algorithms are going to be a little bit more strict than a consumer score. And I can tell you in my experience, the mortgage credit score is always lower than the consumer credit score. So if you are monitoring your consumer credit score through one of these websites or applications that I mentioned, and let's say you have a 760 score, then you go to apply for a mortgage and they tell you your score is a 720. Well, don't be alarmed. Don't think, oh my gosh, I just had a 40-point drop in my score. Doesn't have to do with that. It has to do with more of the different industries, different algorithms. This is your mortgage credit score is 720, your consumer credit score is a 760. So I think that's important because obviously when you're applying for a mortgage, you need to know your mortgage score and not necessarily your consumer credit score. So I hope you found this helpful. If there's any questions you may have regarding this, feel free to reach out. Hope you guys have a great day. Take care. Bye-bye.